Current live trading data for AlphaVest Acquisition Corp., now trading as AMC Robotics Corporation under the ticker AMCI, shows the stock sitting at precisely $10.30 USD, representing a massive intraday surge of positive $2.46 or a 31.30% gain for the day. When you see a stock fly over 30% in a single session, your first instinct is probably to assume some massive headline-shattering news has just dropped, or perhaps a sudden buyout rumor has leaked onto the trading floor. That is the expectation, that price action this violent must be tethered to a singular, concrete event that justifies the valuation shift. But the reality with AMCI right now is far more nuanced and, frankly, far more interesting. We are witnessing a perfect storm of technical market mechanics, retail investor psychology, and a classic case of mistaken identity overlapping with genuine sector hype. While the market sees a ticker flashing green and chases the momentum, we need to pause and look at the engine under the hood. This isn't just a simple breakout, it is the chaotic aftermath of a de-SPAC process colliding with the hottest sector on the planet, artificial intelligence robotics. The move to 10.30 USD isn't just a number, it is a testing ground for whether this newly merged entity can hold its floor or if we are watching a liquidity trap forming in real time. Most retail traders scanning their Robinhood stock trading apps this morning are seeing AMC and AI in the same sentence and reacting with pure adrenaline. The ticker symbol AMCI, which previously belonged to the SPAC AlphaVest Acquisition Corp., has officially converted following its merger with AMC Corporation. Here's where the tension between expectation and reality gets sharp. The expectation from a casual glance is that this might be related to the famous cinema chain, or simply another generic tech listing. The reality is that this is AMC Robotics, a company pivoting hard into the Tesla stock narrative of autonomous robots. Investors are buying a narrative of warehouse automation and quadruped, four-legged security robots. This creates a fascinating friction. You have a portion of the volume driven by algorithmic trading systems spotting the 30% variance, and another portion driven by human speculation that this could be the next small-cap play to ride the coattails of the NVIDIA stock AI boom. When you blend high-frequency algorithmic buying with confused but enthusiastic retail capital, you get exactly what we are seeing today, a vertical green line on the chart that defies immediate logic, but makes perfect sense when you understand the liquidity vacuum of a new listing. Let's look closer at the intraday movement. A move of $2.46 on a stock that was previously languishing in the $7 range is significant because it breaks critical psychological resistance. For days, the price action has been choppy, typical of a post-merger SPAC where early investors are looking for an exit while new money tries to find an entry. Today's explosion through the $10 mark is a technical breakout. In the world of online investing, breaking $10 is often seen as a legitimacy barrier. Stocks under $5 are penny stocks. Stocks over $10 are perceived as investable assets by a wider range of funds. By crossing this threshold, AMCI has likely triggered a wave of buy orders from momentum strategies that filter specifically for double-digit percentage gainers with rising volume. If you are using interactive brokers or a similar professional setup, you would see the Level 2 data lighting up with bid support stepping up every few cents. This is not just a few people buying, this is a coordinated repricing event. However, we have to talk about the Schwab Intelligent Portfolios and the passive money. Usually, newly de-SPACed companies are too volatile for conservative automated portfolios. This means the buying pressure we are seeing is almost entirely active. It is self-investing money. It is traders making split-second decisions. This creates a fragile floor. If the momentum turns, There is no passive index fund support to catch the falling knife. The reality of today's 31% gain is that it's built on aggressive, speculative volume. If you look at the relative volume today compared to the last 5 sessions, we are trading at multiples of the average. This suggests a liquidity event where the float, the number of shares actually available to trade, might be tighter than reported. SPAC redemptions often remove shares from the market, leaving a tiny supply. When demand spikes on a tiny supply, prices don't just rise, they teleport. That is likely a major component of today's move to 10.30 USD. Now, let's shift gears to the company itself, because you can't trade a ticker symbol forever. Eventually, you have to own the business. AMC Robotics is not a new startup born yesterday. They have a history in the security sector, specifically with the YI brand of security cameras, which many consumers might recognize. But the expectation was that they would remain a gadget company. The reality they're selling to Wall Street now is that they are an enterprise robotics firm. They are rolling out AI-powered quadruped robots designed for warehouse patrol and incident response. Think of the famous robot dogs you see in viral videos, but equipped with security protocols and connected to the cloud. This pivots the company directly into the industrial automation sector, a space that is currently seeing massive inflows of capital. Investors are desperate for exposure to physical AI, not just chatbots, but machines that can move and work. With Tesla stock bringing humanoid robots into the conversation, AMCI offers a lower cap, higher risk alternative for those looking for a lottery ticket in the robotics space. This business model transition is what justifies the bullish thesis for many. The security camera market is saturated and low margin. The industrial robotics market, however, is nascent and commands high valuations. If AMC Robotics can prove that their dogs can actually replace human security guards or augment warehouse safety teams, the addressable market is massive. Every logistics center, every data farm, and every large-scale manufacturing plant is a potential client. This is the story being bought today at $10.30. But, and this is a massive but, we have to look at the financials. Post-SPAC companies are notorious for having rosy projections and messy balance sheets. The capital raised from this merger is intended to fuel this commercialization, but burning cash to build robots is a dangerous game. Unlike Apple stock, which has a fortress balance sheet to fund R&D, AMCI is likely operating with a much shorter runway. This means they need to execute perfectly, or they will be back to the market asking for more money, which leads to dilution. For the individual investors sitting at home, perhaps using SoFi Invest or checking their Fidelity mobile app, the temptation to chase this green candle is overwhelming. You see the 30% gain and you think, if I get in now, maybe it goes to 20. That's the greed talking. The professional approach here is to wait for the consolidation. After a 30% move, the RSI, Relative Strength Index, is likely screaming that the stock is overbought on the short time frames. Traders who bought in at $7 are sitting on massive profits and will be looking to sell into this strength. We call this the profit-taking zone. If you enter right now at the highs of the day, you are essentially providing the exit liquidity for the smart money that got in last week. A safer play for those practicing prudent online investment strategies would be to watch for a pullback. Does it hold the $9 level? Does it turn $10 from resistance into support? These are the questions you need to answer before you click buy. Let's pause for a second. I want to hear from you guys. This sector is heating up fast. Comment below with your take. Do you trust these new robotics companies to actually deliver, or do you think this is just another tech bubble waiting to pop? And if you're holding AMCI, let me know your entry price. I'm genuinely curious to see where the retail sentiment is sitting right now. Getting back to the analysis, we need to consider the broader market environment. We are in a period where investment help sites and investing sites are flooding with bullish sentiment on AI. This creates a rising tide that lifts all boats, even the leaky ones. AMCI is benefiting from sector rotation. Money is moving out of defensive stocks and back into high-growth potential names. This risk-on environment is the oxygen that a fire like AMCI needs to burn. If the broader NASDAQ starts to sell off, or if NVIDIA stock takes a hit, AMCI will likely suffer a disproportionate drop. It's a high beta stock, meaning it moves with the market, but at a much more exaggerated amplitude. A 1% drop in the market could mean a 10% drop for AMCI. Conversely, a flat market allows AMCI to run on its own specific news and momentum. Another angle to consider is the institutional footprint. Right now, this is largely a retail show. Major Fidelity mutual funds or Fidelity wealth management accounts typically don't touch a stock like this until it has shown a few quarters of consistent performance. They have strict risk mandates. This leaves the stock in the hands